Good afternoon, everyone, and welcome to KLG's educational webinar series. We're excited to kick off 2025 with a highly anticipated discussion on the difference between taxable income and available cash flow. I'm Samantha Brennan, and I'll be your moderator today. The session will run for about an hour. Feel free to drop your questions in the Q&A box. We'll address as many as we can during the webinar. To get started, I'll briefly introduce our speakers and review our disclaimer. Today's presenters are Jeffrey Gibraltar and Maida Kramer. Jeff is a partner here at KLG with over 20 years of experience in business valuation and forensic accounting. His areas of expertise include matrimonial cases, estate and gift tax planning, shareholder disputes, and litigation support. He has served as a court-appointed financial expert, testified in both state and federal courts, and frequently speaks and publishes on these topics. Next is Maida. Maida is a senior associate at KLG with over a decade of experience in financial asset tracing, business valuation, and forensic accounting. She collaborates with attorneys, financial professionals, and closely held businesses on cases involving litigation, enhanced earning calculations, and shareholder disputes. Our disclaimer: this presentation is for informational purposes only and does not constitute legal, accounting, valuation, or tax advice. The examples provided are for illustrative purposes only, and these materials may not be distributed without KLG's consent. With that, let's dive in. Jeff and Maida, the floor is yours.
All right, great. Thank you, Sammy. Good afternoon, everyone, and thank you for joining us on this snowy, rainy, whatever it's doing out there Thursday. So we had over 120 people registered for today's webinar. So really excited to see that this is a topic of interest. This is now our second year of offering these webinars. We did 6 last year, and we're going to continue to offer webinars throughout the remainder of the year. If there are any specific topics of interest that you want us to present on, please let us know. There's going to be a survey that goes out after the webinar. Also, if you feel that a particular webinar would be relevant to your entire firm, we're happy to schedule something. And if you look on our website under appearances, you'll see some of the webinars that were previously given. We have a lot to cover, and we want to be mindful of everyone's time today. So if you have questions along the way, as Sammy said, please enter them in the Q&A section at the bottom of your screen. If we're not able to address the questions during the presentation or at the end of the presentation, then we'll make sure that we reach out to you individually to respond. So today's topic is taxable income versus available cash flow. What's the difference for attorneys? And so just an overview to go over what we're going to cover today. What is included in personal taxable income, and where can you as attorneys, easily find these income items? What is included in available cash flow, and again, where can you find these items? And then how personal taxable income may differ from available cash flow. And that last point really is the most important part of what we want to go over today. Understanding why not all income is cash flow and vice versa. And when you're determining a client's income, understanding that taxable income and distributions are not additive. That is really key. A lot of times we'll hear from attorneys, well, you have the income, and then they'll say, but you have to add in, the distributions as well. Okay, they're not additive, and we're going to explain to you today why they're not additive, and that they need to be considered separately. So of course, when you hire, a forensic accounting firm like KLG, this should always be part of the analysis to determine the income, to determine the cash flow of the parties. But, based on today's webinar, we hope that, you as attorneys are really going to be able to, to pinpoint these items yourself. Okay, so a lot of our work is in the matrimonial area. So for matrimonial attorneys, we often say that the income reported on the personal and business tax returns do not necessarily tell the whole story. And it's crucial to understand, what the difference is. What is treated as income for tax purposes versus what is considered cash flow and available to the parties for, lifestyle spending. For commercial litigation attorneys, it's important to understand what the true profits reported to each owner are, and that distributions to each owner should be equal to their ownership percentages. But in some cases, we find that that's not always the case, right? And that there's disproportionate distributions that are made. And for buy-sell purposes, it's important to a potential buyer to understand the difference between income and cash flow available to ultimately make a decision on the purchase, right? So the purchaser needs to understand how much money they can expect to receive from the business each year. And based on that, how long it's going to take them, to essentially recoup their purchase price, in terms of number of months or number of years. So what does taxable income mean? So taxable income refers to the portion of an individual's income that essentially is subject to taxation by the government. So pretty much anything, right? So taxable income can take the form of money, property, goods, or services. And some of the more common types of taxable income items, employment income, right? So for example, wages that are reported on Form W-2, freelance or independent contractor income where they're going to receive a Form 1099. And this could include self-employment or side jobs, as well as goods or services which are sold online or bartering of goods or services. Rental income, that's pretty self-explanatory, just income that's earned from renting either a property or something else. Flow-through income, right? So when you have an ownership interest in a partnership, an S corporation, and that portion is going to be considered taxable, the flow-through income. And this is where the forensic accounting really comes in, right? Where we're engaged to determine what the true business income is to the owner after we make adjustments for any personal expenses being paid through the business, as well as unreported income items such as cash. So we're not going to go into detail on this today. If you look back on our website, you'll see that there was a previous webinar that we did, that deals with forensic accounting, and how to determine, what the true income is of a business. But for today, just understand that business income obviously is taxable, and we're going to show you in a few minutes where it can be found on the tax return. Investment income, this includes capital gains, dividends, interest, income related to digital assets or cryptocurrency, benefit payments such as distributions from retirement plans, unemployment benefits, and Social Security payments. Some types of canceled debt or debt which has been forgiven and is no longer due can be considered taxable. And then alimony payments for the beneficiary. And just, some other items that you'll see that aren't necessarily as common, but, tax refunds and rebates, gambling winnings.
I think he froze when he was talking about tax refunds, our gambling winnings, court awards and damages and prizes and other awards. These are less commonly seen on an individual's personal tax return, but yet we still do see these. And these are taxable items that are taxable income. So some other less commonly seen are, oh, sorry, I apologize. Now these are the common types of non-taxable income, which we will also discuss further later, because some of these will also represent available cash flow to an individual. But it could be life insurance payouts. So when somebody dies, Sammy, can you go ahead one screen, please?
Yes.
Thanks. So some of the life insurance distribution from a Roth IRA is not taxable. Withdrawals from health savings accounts for medical expenses are not taxable. Employee provided insurance benefits, which come from your employer, are not taxable. Something like an automatic life insurance or disability benefit. Interest on municipal bonds are not taxable, and gifts are not taxable to the recipient, but may be taxable to the giver. So let's, next slide, Sammy. So most of these items, we want to know where to look for these. Most of these are on the various schedules of the personal tax return, except those items that are not taxable are not necessarily reported on the personal tax return and represent cash flow, which we will discuss shortly. But let's go to the next slide, which has page 1 of a Form 1040. This is the page where where all the income is reported. The final line on this, which is line, just give me a minute to line 16, 15, 16, it's the bottom line is the total taxable income. So all those items that we just discussed are on various forms that we'll look at in a minute, but they all roll up to this page where you can find taxable income. And that is the amount that the government taxes, as Jeff said earlier. So in the first box one, the first line, where if an individual receives wages on a Form W-2, those are the federal wages are what's reported on in box one. And I think most people are pretty accustomed to seeing that. Box 2B and 3B report the portion of taxable interest and dividends. And these will also refer to Schedule B, which we'll look at in a minute, and that reports the detail of the interest and dividends. And this is interest and dividends that can be found on, if you have, for example, an investment account that earns interest, or a bank account that earns interest. But it also can include the business owner's share of a business's interest or dividends. Box 4A through 6B report the taxable portion of IRA distributions, pensions, and Social Security benefits. Box 7 reports capital gains and losses. And this also will refer to Schedule D that we'll look at in a minute. And that's where you can find more of the details of what comprises the amount that is reported in box 7. Box 8 reports other income items that refers to Schedule 1. Again, it's a summary of what's reported in Schedule 1, but the Schedule 1 also has more detailed information. Box 9 shows the total of all the items we just talked about, and it reports total income before any kind of deductions that get you to taxable income. So let's go to the next slide.
Did it go?
The next slide is Schedule 1.
Sorry, I'm just pressing for a second. There you go.
Thanks. So Schedule 1 shows the detail of some of the additional income that is reported on page 1 of the 1040. The most common ones that we see here are business income for a sole proprietor. So if someone reports their business on Schedule C, which is for a sole proprietor, the income will flow through, the profits from that business will flow through from Schedule C into box 3. Box number 5 is for rental real estate, royalties, partnerships, and S corps. And this is where the pass-through income for the business owner that's proportionate for that business owner is reported, related to all of the activity that's taxable and passes through to the activity from the business that passes through to the personal tax return. And it also refers to Schedule E, which we'll take a look at in a minute. And then at the bottom, you get the total of all of these additional items, which will flow through to the first page of 1040. And here's Jeff. Welcome back. Sorry for the difficulties.
So that was a test to see just how good Maida is under pressure. How'd you do, Maida?
Well, other than having difficulty getting the slideshow working.
I am connected by a hotspot from my phone on my laptop. So sorry about that. You can't prepare for technical difficulties. Anyway, so you want to continue, Maida?
No, go on. You can pick up where you left off. We're talking about a Schedule B.
Schedule B. Okay. Let's see here. All right, so you're advancing the slides at this point, right?
Sammy has control of the slides now.
I am. I'm controlling the PowerPoint.
All right, we're back on course. Okay, so Schedule B. So the Schedule B, you see right at the top, it says,
Okay.
interest and ordinary dividends. So this is going to show the details of interest and dividend income. Part 1 is interest and part 2 is dividends. And then you'll notice box 4 and box 6 that are highlighted in red there. The totals of that are going to flow over to page 1 of the tax returns. All right, so if we go to Schedule C, the next slide. So this is Schedule C. Right at the top, you'll see it says profits or
Right.
loss.
Hang on,
Go
Sammy, you
ahead.
need to go ahead a couple of slides.
Yeah, I can't see you guys. So,
Sorry, it was freezing.
There you go. We're having all sorts
so
of,
we're all
I think it's
freezing
the
in
gloomy
here.
weather.
I guess so. So Schedule C, right at the top, you'll see it says profit or loss from business, and it notes that it's a sole proprietor. So I'm sure Maida mentioned earlier that, if you are a sole proprietor, you're going to file your taxes on Schedule C. You're going to report your income and your expenses. And so part 1 is going to show the income. Part 2 is going to show the expenses. And then box 31 is going to show the total of the income or the loss related to the business. And then this is going to flow over to Schedule 1 that Maida described earlier. All right, if you go to the next slide, this is Schedule D. And right at the top, you're going to see it says capital gains and losses. And this is going to show the details of short-term and long-term capital gains and losses. So box 7 is going to report the total of the short-term capital gains or losses. And again, that's going to flow over to page 1 of the personal tax return. And then box 15 is going to show the total of the long-term capital gains and losses. And that's also going to flow over to page 1 of the tax return. And then finally, just to show you Schedule E, you see right at the top, it's going to show, it's a supplemental income and loss from rental, real estate, royalties, partnerships, S corporations. Part 1 is going to show income or loss related to real estate and royalties. And again, it's going to break down the income and the expenses. And then box number or line number 26, that's box there in red, that's going to show the total income or loss from rental, real estate, and royalties. And this is going to flow over to Schedule 1. And then if you go over to the next slide, Sammy, this is the second page of the Schedule E. And part 2 is going to show the income or loss from flow-through entities such as partnerships and S corporations. And then line 32 is going to show the total. And again, this is going to flow over to Schedule 1. So, what we really wanted to show you here is to identify, what the main taxable income items are, and then really show you how easily you can locate these. I mean, right on page 1 of the personal tax return, you're going to find total income, and you could see where the breakout of all of these line items are just by looking through the first couple of pages of the 1040. So I'm going to turn it over now to Maida.
All right, back to me.
Talk about cash flow. Back to you.
So just before I move on to the cash flow section of this presentation, I just want to note that for Schedule E and Schedule D and other schedules that Jeff was showing, some of these also have other supplemental schedules that may or may not be included in a personal tax return, depending upon the type of taxable income, capital gains, interest, etc., that are being taxed and have to be reported. So you may see a lot of other, sometimes you see a very thick and scary looking tax return. That's because there's just a lot of supplemental schedules and requirements that the government has. But to summarize it, we've shown you the most important places to look for all that information. So, which is great to know, because now you know really the taxable income that is available to the individual. But what you may not know is what is the available cash flow. And so what is available cash flow? Well, available cash flow is the amount of money that moves in and out of your bank account. It's the amount of money that you have available to pay bills. And not just an individual, it's also the same for a business. Every business maintains a bank account, or at least we hope it does. And you have to be able to pay your bills. You need cash flow to pay your bills. And an individual needs cash flow to be able to maintain a certain lifestyle. So when we talk about cash flow and the sources of cash flow, this is what is in your matrimonial attorney. You want to know how much is available for child support and how much is available for alimony. Well, sometimes you need to look beyond what the taxable income is and look at the cash flow. And where is cash flow reported? Well, we know a lot of it is reported on the 1040 because taxable income is also generally, for the most part, cash flow. In particular, if you have an individual who just gets W-2 wages, the after-tax amount is cash flow. That amount will be deposited into their bank on a regular basis, whatever the frequency of the payroll. And that is their cash flow. But for individuals with a business who are a business owner and have a business interest, the flow-through income of the business is what is reported on the tax return, as we just discussed. But there is one other important piece that a business owner of an S Corp or an LLC gets, and that's a Schedule K-1. We'll talk about the Schedule K-1 in a minute, but there's an important box on that Schedule K-1, which is distributions. And as Jeff said earlier, the distributions represent the cash flow to that business owner, not necessarily the amount of profits that are reported, because as we'll discuss, profits may or may not be distributed to the business owner. So let's take a peek at what a K-1 looks like. There are two different types of businesses that we generally see that issue K-1s, because there are two different business forms. There's a Form 1065, which is for a limited liability company. K-1s for both limited liability companies and for S Corps that we'll look at next has over here on the right side a whole bunch of personal information and identifying information about the partner or the business owner. And then it has on the right side is where the income is reported. And the boxes here in red, which we'll talk about in a little more detail, are where the taxable income items come from. And he can move on, Sammy. Here is a Schedule K-1 from Form 1120S, which is the tax form for an S Corp. And again, on the left side of the form, you have all of the personal and ownership identifying information. And on the right side of the form, and in particular where the red box is, you have all of the information related to the taxable income. One big difference in the personal section between the 1065 K1 and the 1120S K1 is that Sammy, can you just go back a slide? No, back one. On the 1065 K1, in the lower left portion, you can see the capital account of that individual, and that will show their contributions and distributions to the business. But that's a whole nother topic of conversation. So now jump ahead to. So let's look at the components of income for a 1065 K1 and where those income components can be found on a Form 1040. So box 1 shows the profits of the business that pass through to the business owner. And that will be found on the Schedule E that we just discussed. Box 2 is the rental real estate income or loss to the business owner from that business. And also that also is reported on Schedule E. Box 4, A, B, and C, which is unique to the 1065 K1, is guaranteed payments. Sometimes in an LLC, you will find that the business owners don't take a salary, but instead they take a guaranteed payment. And that is a form of compensation that we often see, and that is also reported on Schedule E. Box 5 is interest income, which is the income, the interest income that the business is earning. This is not in a personal bank account or investment account or brokerage account. This is any interest income that is being earned by the business, and then this shows the proportionate share to the business owner. Boxes 6 through 10 are for dividends, royalties, capital gains. And again, this all represents the income for the business. This is business income, and then what's reported here is the business owner's proportional share of that income. And as we'll talk about in a minute, a lot of these items, particularly the capital gains and the dividends and the interest, are not necessarily going to be distributed to that business owner. They're not cash to that business owner unless the business decides to distribute it to that owner.
And so if I could just jump in for 1 minute. So,
Sure.
you may have heard, the phrase phantom income, and that's what this is, where an individual is taxed on these amounts, it's included in their taxable income, but it may not be cash flow that they're putting in their pocket, because if it's not distributed, they may not have actually received, all of those amounts.
Correct. Thank
We
you.
have a question in the chat.
Go ahead.
When reviewing income derived from a large accounting or law firm, where on the K1 would you look to determine total income?
So that's a great question. Thank you. You would look primarily at box 1, 2, 3, 4, and 4, A, B, or C, because very often law firms do not pay their law firm partners a salary, but instead they will make a guaranteed payment to them. And that's where you most frequently, large law firms, accounting firms, sometimes you'll see it in private equity firms or in hedge funds, where the owners will receive a guaranteed payment instead of a salary. So they won't receive a W-2. They'll receive a guaranteed payment, which on the form 1065 K1 is reported in box 4. If you go back to the full 2 slides, Sammy, to the full K1, where we see the, right. So you'll also see on to the left, to the right of the box, in box on the top right, there is a box that shows
Number 14.
Is it box 14, which says
Yeah.
self-employment earnings? Sorry, it's too small for me to read on my screen, even with glasses. So anyway, the box 14 will show you the total earnings of an individual. That should not be construed as taxable income, because if the person is paid, may have some wages paid to them or compensation paid to them that is not taxable. So for example, if the firm pays their health benefits or medical benefits, those will be included in those self-employment earnings, but they are not taxable, so it may not be reported in the guaranteed payment, for example. So there can be differences between boxes 1, 2, 3, and 4 and box 14.
But box 14 will really be a good indication as to what their gross wages are. For lack of a better word, since it's a partner, maybe, it's not wages, but what their salary is.
Right. And again, that's not, it may or may not be available cash flow, but we'll get into that shortly. So let's go ahead a couple of slides to thank you. So on the K1, similar income components as on the 1065 K1. Again, the biggest difference being there is no box here for guaranteed payments. So box 1, the ordinary business income that flows through to the business owners reported in box 1, and it flows through to Schedule E. And the same with the net rental real estate, also flows through to Schedule E. Box 4, the interest income, well, that is reported on the 1040 in line 2, which we talked about earlier. And then the rest of this, 5, 6, 7, 8, 9, all the dividends, royalties, capital gains, etc. Again, this is the business owner's share of the business's dividends, income, royalties, and capital gains that are taxable to the business owner as flow-through income. Next slide. So as I said earlier, there's that one little piece of and as I mentioned, and as Jeff mentioned, there's that one little piece of a K1 that is a distribution. And a distribution is the amount of money, and it's not always cash, but frequently it is, that is distributed by the business to its business owners. And for an S Corp, for an on the 1120S, it is always supposed to be proportionate to the ownership percentage. But on an LLC, that's not necessarily the case. So let's go on and talk a little bit more about distributions and why these distributions may or may not be the reported income on a Schedule K1. And this will help you to understand better what is available and what is not available cash flow. So the distributions are the amounts that are, we discussed that they're the amounts that are reported. And we just showed you where they're reported on the K1s. So why would distributions be less than what's reported on a Schedule K1? Well, there could be some debt service. So the business may have an outstanding loan that it has to pay, and it needs the cash available in its business to pay that debt service. So if it doesn't have sufficient, although it's showing profits, that doesn't necessarily mean that the cash is available to distribute to the business owner. They may want to hold back some money to reinvest in the operations of the business, or to maintain a sufficient level of working capital, or they may want to buy some new equipment to improve the business operations, so that right now in any given year they may need some cash available to make for business decision purposes, to reinvest, to buy new equipment, to buy additional inventory, any number of reasons that you can see why a business may not distribute all of the earnings, because it needs that cash for other purposes. And one important item is that sometimes there's a personal tax situation. A business owner may not want to distribute all of the cash because they're going through a divorce, and they don't want their spouse to know that there is so much money available. So sometimes you may have, for those of you who are matrimonial attorneys, you may have a client come and say to you, I don't have that cash. I can't pay that alimony. Look at what my business said. Look at what my tax return looks like. Look at my bank account. Well, there may or may not be a good reason for that.
We have another question, Maida. Who determines how much is distributed each year?
It's a business decision, and the business owners will typically make that decision and determine how much of the business profits that they will distribute. And again, it's for any number of reasons why they may under or over distribute relative to the taxable profits that are reported.
So again, an area, and I think Maida was alluding to this, an area for potential, divorce planning. If money is accumulating, if we see that money is accumulating within the cash account of the business because they're purposely not distributing it, because they, instead of distributing it and splitting the asset 50-50, they're going to keep the cash in the business and hope that the spouse is going to get a smaller entitlement percentage. It's an area that we'll typically look at to see historically, have they been distributing, and are they suddenly not distributing now? And, is there more cash or, too much working capital that they're leaving in the business that we need to adjust in our valuation?
Right, because keep in mind that just because a business reports a certain level of income doesn't mean they distribute it to, and is taxable. That level of income that they report is taxable to the business owner, doesn't mean it's being distributed. So that business owner truly may not have the cash available to meet certain payments, personal payments. So let's now talk about when distributions may exceed the amount of income that is reported. I will admit, I think we see this less frequently than we see the opposite. But sometimes if a business owner owns a real estate entity, because of tax reporting of non-cash expenses, particularly depreciation, if in a business that owns real estate, we will see that the profits may be very low. But that doesn't mean that there isn't cash available to distribute. And in particular, if a business refinances a mortgage, because it has so much equity, some of that mortgage, the proceeds of that mortgage refinance may be distributed to the business owners. If the business takes out a loan, that business may decide not to use that loan for business purposes, but instead just use it to distribute cash to its business, to its owners. Or as Jeff was just talking about, there can be a buildup of undistributed profits from prior years, because that was the divorce planning years. And now you find out a year after the divorce papers are all signed and you thought it was all over, and all of a sudden that business owner is getting a huge inflow of money. So these are times when the distributions may exceed what's reported on the income. Let's go to the next slide. So there are also examples of taxable income that have no associated cash flow. And we alluded to some of those earlier. But one of them that we see very often that we didn't allude to is that there are different types of deferred compensation and stock options, restricted stock. These are items that, particularly with restricted stock, which we see a lot these days, the individual who is granted the restricted stock units, in each year that those restricted stock units vest, there is taxable income to the business owner, but they never see that income. What they do get instead is a certain number of shares of the company that is, or stock that the company distributes to them. But there is no cash associated with that. There's no available cash flow. And then some of the items that we talked about on a Schedule K1 that are related to the business's activities and operations may or may not be distributed, like we just talked about. So that can be interest income, royalties, capital gains, etc. And Jeff mentioned earlier forgivable loans and debt forgiveness. These are also two items where you will not necessarily have cash associated with the amount that is taxed. Forgivable loans will have a large influx in the year that the loan is given to the taxpayer, but it's taxed over the number of years that it is paid back. So we're going to just walk you quickly through an example of an individual who received restricted stock. So on this slide, if you look at the portion on the left side on the pink, you'll see the gross pay to this individual in the year-to-date column is $1,163,000, and the after-tax wages down at the bottom, his net pay is $521,000. In this instance, $521,000 is the amount of money that represents the available cash to the person. Now, if you look on, we'll go to the next slide. So you can see on the 1040, wages are reported at $1,590,000. So if that person earnings statement showed wages of $1,163,000, why is the tax return saying $1,590,000? Well, let's go back one slide, Sammy. So if you look on the right side under other benefits and information, you're going to see restricted stock conversion of $410,000. So in that particular year, that this individual had 410,000 of vested restricted stock, and that is included in W-2 wages and is completely taxable. But there's no cash coming, no available cash flow with that 410,000. The way that would eventually get monetized and turn into cash is if the shares of stock received are sold. But we've done in the past restricted stock seminars, so you can go back and take a look at those and understand that in greater detail. But just to know that the 410,000, which is reported on the W-2 and reported on line 1 of the 1040, is not available cash flow. Let's jump ahead 2 slides, Sammy. One more. So there are also times when there's cash flow that is not taxable, which we touched on earlier. There can be inheritances, loans, and again, interest income and forgivable loans and all the things that we've been talking about throughout. There can be cash flow that's not taxable. We're going to just show you one quick example of that because I know we're getting short on time and we want to leave some time for questions. So let's jump ahead. So this is a piece of a portion of a person's 1040. And the only income that this person reports is from, you can see on line 8, from Schedule 1. And this is income for 2 businesses that total $62,000. And then the taxable income available to this individual after deductions is $18,600. Let's jump to the next one. Now we're going to see on the person's Schedule E, there are the 2 corporations that are listed. Let's take a peek at line A, which is $32,862. That amount of money is reported comes from the Schedule K1 for that individual, which we're going to show on the next screen. Next slide. So you can see here in box 1, the 32,000 is reported. Those are the profits of that particular business. But I want you to take a look over on the right in box 16, where with code D for distribution, this person received 140,000 and change of distributions. Clearly considerably more than the taxable income that the business reported. So when we see something like this, that sends up a red flag for us to say, well, how did this business have so much cash to report, to be able to distribute $140,000 to its owner when it only had profits of 32,000 and change? So let's go to the next slide. So an important place you would want to look for this information is the business tax return balance sheet. And that's what you see in front of you. And if you can look at line 21, where you see other liabilities. So this person or this business had a loan of 299,500 at the beginning of the year, but by the end of the year, it has 499,000. So the business took out $200,000 more in loans. And what did it do with those loans? Didn't use it for business purposes. Instead, it distributed $140,000 to its business owner. And if you look at line 1, you can also see that it was building up cash in the business. So that's a really important factor to keep an eye on, because the taxable income here does not tell the whole story. What you can see here is that this person has money to meet its personal obligations and potentially pay alimony or support a lifestyle. And with that, we'll give you some things to think about. And if you have any questions, Sammy, were there any quick questions that maybe we can answer?
There are none in the chat, no.
Okay. So if you think of questions
Okay, so
after, feel
just to
free
kind of-
to reach out. Did you want to say something, Jeff?
I'm still kind of freezing intermittently, so I don't know what you're going to hear or not. But I know, we were kind of bouncing around between a lot of different schedules. But what we really hope that you take from today is that, if you're looking to identify an individual's income, you could find it right on, page 1 of the 1040. And if you're looking to get an understanding of the difference between income and cash flow, you have to consider at the end of the day the distributions that they may take or may not take. And so the distributions are easily identified on the Schedule K1s. So if you take nothing else from this presentation, at least take those two components, as well as the fact that when you have income and distributions, they're not additive in terms of determining what an individual's total taxable income is. So apologize for the technical difficulties. Thank you, Maida, for keeping us on track and for covering. And we thank you all for joining. You're going to get a survey. Let us know if there's any additional topics that you would like to hear about in the future for future webinars. And with that, we thank you for joining us today.